Everyone shows the wins in trading, but here's the truth. Broken code, ghost trades, sleepless nights. It felt like the market makers themselves were hacking me. But you don't quit, you rebuild, you refactor, you rage, then you fix it, you patch and push forward. And then, it starts printing. Now it's real, consistent, scalable. Liqbot PRO is printing on Bitcoin, and we're not done. Liqbot PRO V5 is coming. Bigger, better, faster, the harvest is coming, be ready.
Welcome to the Deep Dive. We're all about plunging into complex info to pull out, well, the really fascinating stuff. Today we're looking at something that might just flip your whole understanding of how markets work. Ever looked at a chart and thought, wait, how did the price go up? All I saw were sells. Or the other way around, right? Why is it dropping when everyone seems to be buying like mad? Sounds impossible, doesn't it? So our mission today is to unpack an advanced system, one designed not just to spot these weird hidden patterns, but actually use them. We're talking about uncovering what one developer calls market engineering. Basically, price being deliberately shaped, tick by tick, often right under our noses. Get ready, because this might really reshape how you see the markets.
Yeah, it's pretty wild. And what's really interesting is how this developer, through years of just watching, came to this really unique view of market dynamics. Our sources here are, well, detailed code descriptions for an AI trading bot he built. Plus, we've got his firsthand accounts, him sharing these kind of surprising discoveries he made along the way. It's like a peek behind the curtain into the real mechanics.
Okay, let's get into it then. Our story starts with this developer, Nico. He's been in the market since, 2009? A long time. And he started seeing these movements, these impossible things, not as glitches, but consistently, like a feature, not a bug, as he put it. He got this sense that the market wasn't just happening, it was being, engineered in real time.
Exactly. And that brings us to the main idea here. Market microstructure.
Yeah.
We're not talking big picture stuff like economics or earnings reports here. This is the nitty-gritty, the tick-by-tick games that the big hands, market makers, big institutions play. They're constantly managing the order book, trying to trap other traders, creating this sort of illusion of randomness sometimes. It's a very precise, small-scale game.
Right, playing games at the tick level. And Nico, watching all this, he starts pinpointing specific recurring weirdnesses, anomalies. Two really jumped out. First, what he calls the uptick sell. This is when you see tons of selling volume, like overwhelming selling, but the price actually lifts. It goes up. I mean, that flies in the face of basic supply and demand, right?
Yeah, totally.
He calls it pure market-making manipulation at the offer, just blatant. Then there's the flip side. The downtick buy. Here you see huge buying volume pouring in, strong buying, but the price gets pulled down. Buyers are active, yet the price falls.
Again, completely counterintuitive.
And he calls that manipulation at the bid.
Mm-hmm. And it's really crucial to get this. These weren't like abstract ideas he found in some finance textbook. No, this came from just countless hours of observation. From, as he says, blood, sweat, and data. Talks about spending years just glued to the screen, watching time and sales data, trying to reverse engineer, studying every tiny price move. It's the kind of thing, you only really grasp after seeing the same impossible pattern happen 1,000 times. After losing money, making money, tweaking code, breaking code, it took, immense dedication to decode it.
Okay, so he identifies these patterns, but actually capturing them, these split-second anomalies, that sounds like a huge technical challenge.
Yeah.
You mentioned the raw data from exchanges like Binance. It doesn't just label trades as uptick sells or downtick buys, right?
Not at all, no.
So he had to build the tools to see this himself, reconstruct these metrics from scratch.
Exactly. Brick by brick, as he put it. Had to build it from the ground up.
Wow. That sounds incredibly tedious. I think I'd lose my mind.
Yeah, takes patience. So he built two main tools, two core trackers. First is the uptick-downtick horns tracker. This thing hooks directly into the exchange's real-time trade feed using something called a WebSocket. So it gets a live, constant stream of every single trade. And it analyzes these trades tick by tick, grouping them into tiny 1-second windows, specifically looking for those uptick sell and downtick B or Y events we talked about.
Okay, so that's capturing the individual moments, but then you said it gets more sophisticated.
Right. The second tool is the uptick-downtick tracker. This one looks for sequences. So maybe not just one uptick sell, but say two of them happening back-to-back within a short period.
Ah, okay. Patterns of anomalies.
Exactly. And when it detects a sequence like that, it triggers what he calls a look-ahead analysis.
Mm-hmm.
Basically, it stops and watches.
Yeah.
What does the price do in the next few seconds, say the next 30 seconds?
Got it. So it's not just spotting the anomaly, but seeing the immediate aftermath.
Precisely. And the system doesn't just spot them. It counts them, tracks them, it keeps stats. There's a real-time counter, detailed statistics. It logs how many of each anomaly type occur. It calculates the percentage of times the price goes up or down after an anomaly. And it even tracks the average size of those moves, the biggest move, the smallest move following the event.
So quantifying the impact.
Yeah, which leads to the big question, right? What did all this incredibly detailed tracking actually reveal about how the market behaves after these weird moments?
And this is where, apparently, things got really interesting. The findings were pretty surprising, even to him. Okay, let's take the downtick buy anomalies first. Remember, that's strong buy volume, but the price is dropping.
Right, the counterintuitive one.
The system showed that over 60% of the time, after one of these anomalies, the price kept falling.
Think about that. Aggressive buying happens, price drops, and then it continues to drop more often than not.
That just completely messes with the whole buy the dip idea, doesn't it?
Absolutely. It suggests maybe the market makers are orchestrating that drop, and jumping in to buy might be exactly the wrong move.
Okay, hold on. So just to make sure I'm getting this straight. The system sees heavy buying driving prices down, and that's actually a signal that more downside is likely.
That's what the data showed, yeah. Over 60% probability in his findings. It really flips the script.
Wow. Okay. What about the other one? The uptick selling pressure, but the price goes up.
Yeah, the fake pump scenario, maybe.
Yeah.
The data there was different. It showed that only about 50% of the time does the price continue going up after that kind of anomaly.
So basically a coin flip.
Pretty much.
Yeah.
He described it as often being just a trap, a fake out. The price might mean revert, just fall back down, or the whole move gets erased pretty quickly. It's kind of staggering when you realize how much of what looks like, genuine price movement might just be these order flow games, these engineered fakes and shakes. And the size of these fake moves, the amplitude, can be massive sometimes.
So, okay, you've got these incredible insights now, spotting manipulation in real time. What do you do with it? How does this become practical?
Right. Well, these findings aren't just sitting in a spreadsheet. They're actively used. They've been integrated into an AI-enhanced trading bot that Nico developed called Liqbot.
Liqbot. Okay, and what does that bot focus on?
Its main focus is anticipating and trading around market liquidations, those big forced closures of positions. But these anomaly detectors add a whole new layer of intelligence to its execution.
How so? What changed in the bot's logic?
A couple of key things. First, there's active learning and blacklisting. The bot constantly watches how well each anomaly pattern is performing. Is it actually leading to profitable trades? If a specific pattern, say 2 consecutive downtick buys, leads to 3 losses in a row, or its win rate drops below 40% after maybe 6 trades.
They get benched.
Exactly. It gets blacklisted for a set period, maybe 20 minutes. The bot stops trading that specific signal.
And does it ever come back?
Yep. If performance improves later, maybe the market conditions change and the pattern starts working again, gets its win rate back above, say, 55%, it gets unblacklisted. It's constantly adapting.
Smart. Learning on the fly. What else?
There's also dynamic sizing. The bot doesn't just use the same trade size every time. It adjusts its position size based on what the market's doing right now. It looks at things like the average true range, or ATR, that's a measure of volatility. If ATR is high, meaning the market's choppy.
It might trade bigger.
Or smaller. Bigger, potentially.
Yeah.
Maybe double the size, according to the description. It also looks at open interest, OI, from Binance. That's the total number of open contracts.
Right.
If OI is really high, suggesting a lot of participation or potential fuel.
It might increase size even more.
Right. It's trying to be intelligent about risk and opportunity based on live conditions.
And Liqbot isn't just these anomaly trackers, right? You mentioned it's AI enhanced. What other AI pieces are in there?
Oh, yeah, it's quite a suite of tools working together. There's a strategy auto-optimizer.
Using genetic algorithms. Sounds fancy.
Yeah, basically evolution for trading rules. It constantly tweaks parameters to try and find better settings. There's also a regime detector using k-means clustering.
Yeah.
That tries to figure out, is the market trending hard? Is it stuck in a range? Is it super volatile right now?
And it adjusts strategy based on the regime.
That's the idea. Then there's a pattern matcher using k-nearest neighbors. It looks for similar historical price action. A specific trap detector module designed to sniff out common market traps.
Wow.
Even the risk manager uses neural networks to learn and adapt how much risk to take.
It sounds incredibly complex, like a whole ecosystem inside the bot.
It is. And there's even a placeholder for, get this, a trade reason explainer using a large language model eventually.
To explain why it took a trade.
Yeah, for transparency. Though that part sounds like it's still in development.
This sounds amazing, these insights. But markets change, right? Don't these big hands adapt? Couldn't they figure out the bot is watching for these specific anomalies and, I don't know, change their tactics? Or engineer fake anomaly signals?
That's a really good question.
Yeah.
And that's exactly why the active learning and the continuous monitoring are so critical. The blacklisting mechanism is designed precisely for that. If a pattern stops working, the bot stops using it.
So it has a built-in defense against the pattern decaying.
Hopefully, yes.
Yeah.
And the dynamic sizing also adapts to changing volatility and participation. It's not static. Plus, Nico is constantly observing, constantly tweaking, and all this activity, all these modules, they feed into a visual dashboard he built called the Dual Tracker UI.
A GUI, so he could see it all happening.
Yeah, it lets him track the logs, see the real-time stats, profit and loss, win rate, and provides a detailed timeline of every event, every detection, every trade decision. It brings it all together visually.
It's easy to focus just on the tech, the AI, the algorithms, but it sounds like the human element here was crucial. Nico emphasizes the struggle, doesn't he? The hours of confusion, mistakes, lost trades, moments of total doubt.
Absolutely. He's very open about that.
Yeah.
It wasn't like he just had a flash of genius and built this overnight. It was a grind. But he also talks about the flip side, that insane high of seeing the truth hidden in plain sight, discovering these patterns himself.
Yeah, that resonates.
And it really hammers home his core belief, which I think is powerful. He says, the real edge is not in buying an indicator or following a guru. It's in doing the work, fighting for your own understanding, and building tools that fit your vision of the market.
Doing the hard yards yourself.
Exactly.
Yeah.
Persistence, building your own understanding brick by brick, like he built his trackers.
So after all this development, discovering these anomalies, building the trackers, integrating them into Liqbo, what's next? Where does he see this going?
Well, that leads to what he calls the current million-dollar question he's put out to his community. Should this whole new market microstructure engine, these anomaly trackers and the logic around them, should it be fully merged into the existing Liqbo? Make Liqbo even smarter about liquidations.
Okay, option one.
Or option two, should it become its own thing? A completely new, standalone scalping bot, totally focused on trading just these micro manipulation signals, these uptick sells and downtick buys.
Interesting choice. One enhances an existing strategy, the other creates a whole new one.
Right. He says both are viable, both are actually live and running in some form. But the decision on which path to focus on will really shape the future direction of his work.
What a journey. I mean, the big takeaway for me, the real aha moment, is this idea that market moves aren't always what they seem. They aren't just organic reactions. They can be actively, deliberately engineered by players with deep pockets and sophisticated tools.
Yeah. Manipulation isn't just some conspiracy theory. It can be a measurable, detectable feature of the market microstructure.
And crucially, that you can build tools, like Nico did, to spot these subtle games in real time, maybe even profit from them.
It definitely changes how you look at a price chart, doesn't it? So maybe a final thought for you listening. How might your own view of the markets change now, knowing these hidden layers, these engineered moves might exist and can't actually be quantified? How does that shape how you interpret, say, a sudden price spike or the financial news you read? Does it make you more skeptical, more curious?
It certainly makes me more curious. And it makes you wonder, right, what other complex systems out there, not just finance, have these hidden patterns, these unseen games, just waiting for someone persistent enough to unpack them? Lots to think about.
Everyone shows the wins in trading, but here's the truth. Broken code, ghost trades, sleepless nights. It felt like the market makers themselves were hacking me. But you don't quit, you rebuild, you refactor, you rage, then you fix it, you patch and push forward. And then, it starts printing. Now it's real, consistent, scalable. Liqbot PRO is printing on Bitcoin, and we're not done. Liqbot PRO V5 is coming. Bigger, better, faster, the harvest is coming, be ready.